Hey guys, Zoeb here from OneGlassTrader.com and welcome to part 3 of my very own Forex Scalping strategy course. Now if you're just tuning in, again I strongly recommend that you click the link in the top right hand corner or in the description below, which will take you straight to the playlist so you can view the course right from the beginning, because we've gone through some really juicy elements here that you need to understand before you visit part 3. So in the last video, I talked about the two main concepts that are the fundamentals of this strategy. So that is the RSI being in overbought or oversold conditions, along with regular divergence. So again, click the link in the description because you've got to understand those two main key points before moving on. So in this part, we're going to go put that all together and really define some rules around the strategy that allow you to be able to kind of trade this kind of framework or strategy. So again, I'm calling it the OGT scalping strategy, and the best thing about it is it works on any pair and on any time frame. Now, if you're scalping, you really should be doing this on lower time frames, 5 minute, 15 minute, even 1 minute. But again, you'll see setups on this occur on any time frame or any pair. So if you're someone that has a day job and can't be in front of the screens that often or for that long of a period, again you can set up these templates that I'm going to share with you on hourly charts, 4 hour or daily charts here. So again, you'll get those alerts straight to your phone and all that good stuff when we have a look at the indicators shortly. So just to recap and really hone in on how this strategy works. So what it does, it firstly looks for when the RSI comes out of overbought or oversold conditions. So that means that price has been in an extreme, either in a long trend or a downtrend. Price is at an extreme. It's come out of those overbought conditions, and we also have regular diversions. So not only if we take both of these in isolation, so if if the RSI becomes overbought at 70, when it comes out of 70, it will generally pull back or reverse. So that's great. But imagine if we added an additional layer of regular bearish divergence on top of that. You can just imagine the confluence factors of having two main key elements together, therefore increases your probability of a pullback or reversal. So that's the main key element of this strategy, is RSI coming out of overbought, oversold, mixed in with some regular divergence. Again, gives you a high probability for us to take an opportunity of the out of the market and take in some pips. So what we're going to do is go through the indicators that are required. So again, all the indicators that I go through here are either part of the MT4 platform or absolutely free that you can download. So again, I'll go into that in a second. So the first one is my very own OGT RSIMTF indicator. So a lot of acronyms in there. So OGT is One Glance Trader, which is my channel. RSI, as you guys should know now, is the Relative Strength Index, and MTF means multiple time frame. So what that basically means is that this indicator alerts you when the RSI is overbought or oversold on just one time frame, i.e. the current chart you're looking at, or multiple time frames. So if we look at the chart on the right hand side, you can see these arrows. And what these arrows basically means is that um, it's signifying that when the RSI is either in an overbought or oversold condition. So any green arrow that you see, and you can see the RSI over here, is that it is when it's below 30, you'll get a green signal saying that there's a potential chance that this pair might reverse or pull back. And as you can see here, it was in oversold territory, came out of oversold, and then went back into oversold and then reversed. And then the opposite is true in the when the RSI gets into an overbought position. So when the RSI is probably, this is a better example, visually easier to see, is that you'll get red down arrows when price is above 70, and then when it comes out of overbought position, you'll notice that the red arrows, sorry, aren't there anymore. And again, in this example, price then reverses quite steeply. So that's what that indicator does. You then got the MACD indicator, which is my oscillator of choice for spotting regular divergence. So MACD again is just a combination of moving averages that are used, and the moving average, the MACD indicator in the download in the pack for this is actually a linear weighted moving average, and that's because it's a lot more smoother than simple moving averages, exponential moving averages, and I find it visually easier to see divergent setups with the LWMA MACD version of the indicator. Again, you'll get that one as well, so that's great. And then we've got the ATR. So the ATR is the average true range, and what this does, it kind of measures the volatility in the market over X number of bars. And again, it's standard as part of the MT4 platform, and we'll be using that to determine what our stop loss is. And I'll go into the ATR more into that section, which I believe is part 4 of this course. And again, um, what I've done is that I've also created an MT4 template as part of the download pack. So what you'll get is you'll get the RSIMTF indicator, the MACD indicator, and you'll also get you won't get the ATR because it's part of the MT4 platform, but I've also included this template, so everything's all set up for you as part of that, and I'll show you how to in another video on how to upload that template. It's relatively straightforward. So if you click the link in the description below, you can download all the indicators and the template, so you can set your MT4 terminal up exactly how you can see on the screen here, and these are going to be very useful in the examples that I'm going to show going forward. So you can start right now in terms of identifying, when price is in overbought, oversold conditions. You can start looking at finding regular divergence examples, and what we really want to look for is examples of where you've got overbought, oversold conditions and regular divergence, which is what I'll go through in the next slide. So hope that makes sense. A lot of good valuable indicators and information here on this slide, so please make sure you go and download your pack essentially by clicking the link inside the description. So again, what I just wanted to quickly show with you, and again, these are all set up as part of the template, but I just wanted to quickly walk you through the kind of settings of the indicator. And I'm going to start with the average true range. The average true range again is default setting at 14 periods. So what it's doing is looking at the last 14 bars, calculating the high and the lows of each bars and giving you an average, which tells you how much volatility there is inside the market. And again, the MACD settings are again the default standard settings as you get as part of the MT4 MACD indicator, but don't really like the MACD inbuilt indicator, so hence why I've got another one. This isn't my indicator, this is one I found on the internet somewhere, really useful, credit to the owner, but it's the one that I use. And then we've got the OGT RSI MTF indicator. So at the time of recording this course, the latest version is 1.1. And effectively what it does, all this is all customizable, but these are the default settings that I like to use. And again, you can change them, and if something works better for you, shoot me an email, let me know if something's working for you. So we're looking at the RSI period is the last 14 bars. We're looking at a close price. Then you can set your overbought and oversold levels. Again, the default setting is 70 and 30. And what this does here, this time frame bit, it looks at the MTF elements of the multi-time frame element. And at the moment, I've set it to 0. So what that means is it'll give you an alert when the RSI is oversold or overbought only on the current time frame. So if I selected this to 1 and I was on a 5-minute chart, it will only give me an alert when the RSI is overbought or oversold on the current time frame and one time frame higher. Again, we will look at that in part 5 when we talk about the kind of premium setups shortly. And again, you've got an alert mode. Again, you can do push notifications to your smartphone or sound if you're at home, obviously looking at the charts on a more regular basis. So those are the indicator settings. For this, you don't really need to worry about it because the template has them all saved in as standard. So just wanted to give you a view in terms of what these settings are and how they work. So now here are the rules for the strategy and how it all works. And again, we're going to go through a buy trade and then we're going to go through a sell trade, and I'm going to walk you through this step by step. And then in part 5, we then go through another example which includes, lot sizes, take profit, and stop loss as well. So there's going to be plenty of examples inside this course. So the first thing that we need to do is look for a situation where the RSI has been oversold for at least 3 consecutive candles. Now, as you can see here, the RSI has been below 30 in these 4 bars over here. Yeah, so that's what this means. If you see a green arrow, it means that the RSI has been oversold for the last 4 bars. Now what we need to do is, once you've got that, so again, there'll be an alert, whether that's a push notification or a sound, whatever it may be, you'll get an alert when the RSI is oversold. That's great. We don't need to do anything at this point. When that happens, we just wait until point 2, which is we're looking for a bar or that signifies when the RSI has moved out of oversold territory. And you'll know that because there'll be no more arrows, green arrows underneath the bar. So you can see there where I've highlighted this bar over here is now the RSI is out of oversold territory. Once we've got that bit, we then need to look for regular bullish diversions. So again, going back to what we learnt back in part 2, is regular bullish divergence is when price is making lower lows, but the MACD is making lower highs. So therefore, price and the oscillator are disagreeing with each other, and they're disagreeing each other in a pattern that is signifying that there is a strong indication that price could either pull back or reverse. We've got that, and we've also got the RSI being in an oversold territory and now being out of oversold territory. So we have got the 2 main things that we're looking for to enter a buy at the close of the candle that took you out of oversold territory. And as you can see here, is what happens is that price then ranges out slightly, goes in the direction where we wanted it to go, pulls back really just in a bit of a bit into your stop loss, and then goes off to the races and fully reverses into an uptrend. Now again, we'll go through this in the next part, but more than likely in this example, you probably would have got out at this point over here because of your scalping. You only really meant to be in the trade for a few pips. So again, that is a perfect example of how you would do a buy trade. Now, the exact opposite for a sell trade. Now, hopefully you guys can kind of see now just by looking at this chart that I'm showing in terms of regular bearish divergence, where the RSI was overbought, where it's come out of overbought territory. Again, hopefully you can see this, but I'm going to walk you through this step by step because it's really important. So step 1 is the RSI was overbought for at least 3 consecutive candles. And I didn't really explain why 3 consecutive candles, because what we really want to see, we really want to see the RSI, whether it's overbought or oversold, for a long period of time, or in the period of number of candles, depending what time frame you're doing. So in this example, I'm just going to count this: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bars that the RSI was above 70. Yeah, that's a long time, long time. Again, even if you train 1 minute chart, that's only 11 minutes. But in the concept of what you're trying to do is, imagine these were daily bars, for example. That'd be 11 days. It was an oversold, overbought, sorry, territory. So the next thing we're looking at point 2, which is the candle that takes the RSI out of overbought territory. So in this example here, you can see that this bar here takes us out of overbought territory. Therefore, the RSI is now showing a reading of less than 70. So that's great. That's what we're looking for. The next thing we want to do is to see if there's any regular divergence. And now, because we're inside an uptrend, we're looking for regular bearish divergence. So if we draw that on the chart, you can clearly see it's very, very obvious and very, very inside your face. And this is why I like to use the linear weighted moving average MACD as opposed to the regular MACD. You can see that price is making higher highs. And the oscillator should also be making higher highs. Again, as I've mentioned, I'm just drilling this into you, is that the oscillator is diverged from price, so therefore should mimic on what price is doing. But you can see here that this actually making a higher low, or this should actually be lower high, actually over here, not higher low, lower high. So you can see there that price is making higher highs. And the MACD is making a lower high. So again, giving us bearish regular diversions. So we can now go in short at the close of that bar that took us out of overbought territory. And as you can see, what happened there is that price dramatically dropped. Again, I'm not too sure what happens, if that was a retracement or price started ranging, but sorry, I'm just so passionate about this. I'm starting to lose my voice here. That price now is now reversed, and again, we would have easily made our 5-10 pips, whatever it would have been, and we'll go into that in the next part. What our take profit is at the end of that at the end of this bar over here. So again, you're seeing two things happen: RSI in extreme conditions, bearish divergence. Those two things added together, high quality trades, high probability trades. And again, we're just looking to extract a few pips out the market. And I really hope that that this makes sense. Just rewatch these videos again. I'll go through this in part 5 one more time with you guys, so you guys can really understand this. But I really hope this makes sense to you in terms of how we can create these opportunities in the market. And if you guys really struggle with this, just drop me an email, just put in the comments, just any questions you got. I'm more than happy to kind of, walk you guys through it again and do more videos just to show you some examples of this. So, I really hope it starts to make a lot of sense. And yeah, that kind of really brings us to the end of part 3. Again, this is probably one of the most strongest videos out of the 5, because this really goes into the rules and the techniques and the mechanics of the overall system. So part 2, I went through the theory. Part 3 is, this part you're watching now, is the kind of the rules, what you need to do. The next part, which again in my personal view is one of the most important parts, of risk management. So hopefully you got the thumbnail of part 4 on the screen now, and I will click on that, and then let's get into it, and we'll talk about the lot size, take profits, and stop loss. So I'll see you guys shortly.